How's it going, everybody? It's KCG Trades here, and we are approaching one of my favorite times in the markets, earnings season. And with the great feedback I got on my last video, I wanted to make another video on how to trade an earnings gap up, or better known as the gap and go strategy, which is a swing or position trading strategy for potentially huge moves. All right, so I want to make sure you guys know exactly how to do this so you can take advantage of it when they occur. And to be clear, this video is only for going long. This also works on the sell side for stocks that gap down on earnings, but I won't be talking about that today. This method is not for buying stocks before an earnings announcement, as it is very risky and you want to wait until after the company announces earnings to get in on the following day. Holding stocks prior to earnings is usually a 50-50 chance, and the only time you should do it is if you are already investing in the stock and you have a strong cushion where you can withstand a potential drawdown. And just a quick disclaimer, you can pause the video and read it here. Let's just get right into it. So I have my charts pulled up here, and I want to show you guys the beginning of huge moves usually start with a catalyst. And the best, in my opinion, would be an earnings announcement. And I will show you how to essentially get in these potential huge winners at the beginning of the move, starting with the earnings gap up. Now I'll actually show you 5 examples I pulled up here, starting with PayPal. So we have PayPal here. It had a huge earnings gap up back in May and has continued its uptrend since. We also have Sunrun with a earnings gap up back in July and its continued move ever since. We have Snapchat with an earnings gap up back in October, which is the most recent earnings gap up out of these 5 examples, and has continued its move here. It looks to be still beginning its run, consolidating right now. We also have Twilio, which was one of 2020's biggest winners. We have an earnings gap up here in May and continued run ever since. And last but not least, we have Zscaler, another one of 2020's biggest winners, with an earnings gap up in end of May, beginning of June, continued its run ever since. It definitely helps that the market has been cooperative with these earnings gap ups. So please bear in mind how the market is before investing and trading these earnings gap ups, as a cooperative market will definitely help your success rate. And with these 5 examples, I'm going to show you my trade criteria on how I would buy, how I would sell, and basically my rules towards trading these earnings gap ups. So here are my rules and criteria for an earnings gap up. And like the title says, we'll never be able to sell the top, but we can definitely capture a bulk of the move. And in terms of my criteria, there are many different ways to trade this, and this is just the way I do it, as I found success in it. And I actually learned this strategy from Trader Stewie and his private trading group, but he does do it a little bit differently. So I just basically took some of his methods and came up with my own style. So feel free to do the same. Number 1 would be a gap up into or near all-time highs. But before this, even first and foremost, we want to make sure that the stock had a good earnings beat and not an outlier earnings due to a possible one-time event. We want to make sure that the stock truly signifies strong performance with revenue and earnings. Once we have that and we have an earnings gap up into all-time highs, it's a beautiful combination. I truly prefer a gap up into all-time highs, but sometimes you can't always get that. The main reason I prefer it is because you don't want any stock with overhead resistance. When a stock gaps up into new highs, it is much easier. It has a much easier path to continue to the line of least resistance, as Jesse Livermore would say, which would be up. So number 2, we want huge volume pouring in aftermarket and pre-market trading. So once the earnings are announced, usually aftermarket, you want to see huge volume pouring in, and the next day you also want to see huge volume pre-market. This solidifies the move is legitimate and that real buyers are stepping in, and it's not just one person bidding up the stock. So number 3, you want to see huge volume at the beginning of the day with not much selling. And at the end of the day, you want to see it have huge volume, and even better if it's at the highest volume day ever in the stock's history, even higher than the IPO. Once we see volume higher than the IPO day, this is how we know that real institutions are showing their footprint and they're buying this stock. Now, once the first 3 criteria is met, obviously besides the end of day volume, of course, number 4 would step in. you want to initiate a full or half position 3 to 5 minutes after the open or once the selling dries up and buyers step back in control. The reason for this is with any gap up, there will be profit takers. It is inevitable, but if there is huge demand for the stock, the selling will be very short-lived and the institutions will be buying it up and you will see their footprint. So you just want to follow their footprint and ride the wave with them. But this doesn't always happen, as some stocks just don't have that institutional power behind them, or they just get hit with too much selling. So number 5 would be, if new lows are made after 10 a.m. on the gap up day, sell, as something is definitely wrong and it may want to possibly fill the gap. All right, so we don't want to be part of the gap filling process. We want to be in and we want the stock to move up as soon as we get in. Now for number 6, and this is the ideal scenario, once we enter, the stock begins to make its move upwards and make new highs. We want to put a stop loss at the low of day and 50 cents to $1 below the low of day, just to give it some room. As the next couple of days, it could have some pullbacks, just consolidations. So we don't want to get stopped out if it decides to retest the low of the gap. And number 7, once the stock really gets going, you want to give it time to make its full move. So I would definitely recommend using the weekly charts and the 10 weekly EMA to determine your selling. Obviously, sell rules differ with everyone, but this can definitely assist you with your process. So this is my process and this is my criteria. So let's take a look at these rules with the examples in PayPal, Sunrun, Snapchat, Twilio, and Zscaler. So I have my charts pulled up here and I have Zscaler to begin as an example. I'm going to show you step by step, as mentioned, on how I would initiate and manage these positions. So number 1 would be a gap up into or near all-time highs, as we see here with Zscaler. It's gap up at the end of May. It did not gap up, unfortunately, into all-time highs, but what it did do is gap up near all-time highs, which is great to see. And actually at the end of the day and throughout the day, it made new highs constantly and ended the day at all-time highs. So that was great to see. Number 2, we want huge volume pouring in after market and pre-market trading. I can't unfortunately show you that, but it did have strong volume patterns, which is why I kept this stock on my radar. Number 3, huge volume at the beginning of the day with not much selling. As we see here, the stock opened around $87 and only went to $85.50, which was actually at the beginning of the day. So once the gap up occurred, there were those people who took their profits, but that quickly got bought up by the institutions, and which is why I got excited and actually initiated my position around the 88 level. So I put my stop loss at 50 cents below the low of the day, which was $85. So my risk was only $3 per share. And at the end of the day, I was already up $10 per share, which is over 3-to-1 risk to reward ratio. But like I said, this is a swing position trading strategy, so we want to capture the bulk of the move. And as we see here, a huge bulk occurred. So all of my criteria was met, which is why I was really excited with this stock. No new lows were made after 10 a.m. And after the move up, like I said, it would have definitely been hard to hold this position because it did go below the 50-day, did consolidate here, and it actually made a new earnings gap up recently in December. We see huge volume pouring in again into all-time highs, so that was beautiful to see, and it's continuing here. I did actually exit my position using the weekly charts, the 10 EMA. I do believe I exited around, if I'm not mistaken, either here or here. I was shaken out. I don't regret it. I do wish I could have done a little better, as a double bottom actually occurred. I could have stayed into this position and possibly added on the new gap up. But obviously mistakes happen. No one's perfect, especially not me. I'm nowhere close to perfect. But I did capture a bulk of the move, entering around the 88 level and exiting around the 145, 150 level. So almost a double my money for me in a couple of months. Can't complain with that. So that was Zscaler, and I'm going to move on to my next example, which is Twilio. So if we have Twilio pulled up here, this was one of the most beautiful earnings gap ups and earnings gap ups examples you could ever find. So for my criteria in beginning of May, number 1, gap up into or near all-time highs. This one actually gapped up into all-time highs, which was beautiful to see. It had huge volume pouring in aftermarket and pre-market trading, which was why this was on my radar. Number 3, huge volume was pouring in, and actually no selling even occurred. As we see here, it opened at 152.11 and did not even drop just a little bit. Once it opened, it just continued its rampage up. And I was able to get in my position about 3 minutes after the open, as I noticed no selling was taking place. I wanted to get in the action because huge volume was pouring in, first and foremost, and no selling occurred, which showed me that this had huge potential winner signals. So once I got in, I initiated my full position, and no new lows were made after 10 a.m. No new lows were made at all, so that was another great sign. And I put my stop loss 50 cents below the low of the day, so I had my stop loss around 151-ish. And for the sells, this was something I really struggled with. I could have had a much bigger move if I was really paying attention to how I was selling this, but we all make mistakes. I did use the 10 EMA, which was my criteria for it. So I actually sold after the gap up. I do believe I sold around, near the end of August, around the 240 level. So I did make quite a bit of money, but not as much as I could have, as now it's in the 400s. Once again, there's no perfect way to sell the top. There was a lot of shakeouts that happened with this stock, and looking at it from the weekly chart, I could have used the 21 EMA as my stop loss, trailing stop. Would have probably still been in this stock, but hindsight's always 20/20. I did capture a good move, which I'm proud of. Definitely could have captured more. All right, so that was Twilio, and the next stock I have is Snapchat. So this was one of the more recent earnings gap ups that we have had. In October, I actually did take a position in this myself, and there were huge characteristics that were hard to ignore. Number 1, gap up into or near all-time highs. This one was a gap up into all-time highs, which was beautiful to see. And the volume patterns were ridiculously high in pre-market and aftermarket trading, which really kept this on my radar. Number 3, huge volume at the beginning of the day with not much selling. There was a bit of selling, profit taking at the beginning of the day. It opened around the 35 level and went down to 34.50, so not much selling, and it quickly got bought up, which made me initiate my position around the 35 level. And at the end of the day, we had one of the highest volume bars ever. And if I'm not mistaken, I do believe Snapchat on this day was the highest volume day ever, around 250 million shares, which shows you institutions are showing their footprint. So I did put my stop loss around 50 cents below the 34 level. So 34 level was my stop loss. And I had ridden the wave up until last Friday, actually. So I actually did sell on this drop here. I could have waited until the weekly hit the 10 EMA. The reason I did sell it because there was relative weakness with the stock. It went into all-time highs and quickly dropped below the 10 and 21 EMA. I also wanted to raise some cash as sentiment is getting a little frothy, but this was just my opinion. I could definitely easily get back in the stock once the consolidation pattern ends. But for me, I got a big portion of the move, 35, sold in the 52 level, so almost 50% of my money, a little bit less than 50% in a couple of months. Can't complain as well. But yeah, Snapchat had definitely strong characteristics. And yeah, so the next stock I have is Sunrun. All right, so with Sunrun, I actually did not take a position in this myself. Neither did I take a position in PayPal, which is the next example I'm going to show. But for these two, it is something we could definitely study, as it did show characteristics of great winners stemming from an earnings gap up. So let's start with Sunrun. Number 1, gap up into or near all-time highs. This one gapped up beautifully into all-time highs. It did sell off a little bit throughout the day, near the end of the day, but it did recover the next day, so this is great to see. Obviously, we can't see the volume pouring in during pre-market or after hours, but we do see here, based on this volume bar, that it was heavy institutional buying. This was at the time the highest volume bar of the stock's history, so that was great news. What we see here is not much selling throughout the day. As we see here, it opened up around the 24 level and only gave back about 50 cents, but that got quickly bought up. So if we were in this, we would actually buy around the 24-25 level with a stop loss around the 23 level, and just let it ride. This was definitely more volatile than other stocks, but we could still use our sell rules to keep us in the position. Now, actually, while I'm making this video, I'm realizing that possibly the 21 EMA is the best scenario for holding these stocks that have a huge run with their earnings gap up. As we take a look here, if we just use the 10 EMA, if we use the close below a 10 EMA, we would have actually been stopped out around the 58 level. Still a pretty good gain, but if we use a close below the 21 EMA weekly, we would have still actually been in this stock, which is a much higher gain. I'm actually noticing this as well with Twilio. As we see here, Twilio 21 EMA close, you still would have been in this stock. Snapchat still would have been in this stock. Zscaler still would have been in this stock. It did go below the 21 EMA, but it did not close below the 21 EMA. So this is something I'm actually going to add to my notes, because this could be something to pay attention to for you to potentially hold big winners for a longer period of time and capture a bigger bulk of the move. So the last stock we have here is PayPal, another stock that I did not actually take a position in, but another stock we could definitely learn from, as it had a great move stemming from its earnings gap up. So let's just dive into it. Number one, a gap up into or near all-time highs. PayPal did gap up into all-time highs and closed near the high of day, which was beautiful to see. And the volume bars was also beautiful. It's around the 35 million shares traded that day. This wasn't the highest of all time, but this was one of the highest ever for the stock, which was great to see as well. In regards to selling, there wasn't much selling. As you see here, it opened around the 140 level, and it only dipped to around the 139 level. So only gave back $1, but that quickly got bought up. So once you see that, through the intraday charts, you would go long above the 140 level with your stop loss below the 139 level and just let it ride. I don't believe after 10 a.m. this stock made new lows. As we see here, the stock continuously made new highs throughout the day. And how we would play this in regards to our selling, once we initiate our full position, we would just look at the weekly charts. And like I said, something I'm deeply realizing is a 21 EMA might be a perfect play to use as your trailing stop loss in an earnings gap up play. If we use the close below the 10 EMA, we would have been stopped out around the 180 level. But if we use a close below the 21 EMA, as mentioned in the other stocks, we would actually still be in the stock, and it's currently around 240, and we would still be in it. So this is, like I said, something we could definitely take into consideration. Something new I learned that I never even paid attention to before. So I'm glad I actually made this video, as I'm becoming a better trader just by looking at this. Obviously, it's not going to work every single time with every single stock, but we see here, these are just 5 examples of how you could capture huge moves by using the 21 EMA or even the 10 EMA if you're a more active trader. 21 EMA to capture the large bulk of the move. With that being said, that is pretty much it for the day. If you like this video, please comment, like, subscribe, share with your friends and family. Thank you very much for watching, and have a great one.